Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on the screen that'll be featured in this recording. And if there's a stock you have particular interest in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the market. You see the S&P. We remember, have you been watching this ascending pennant pattern? We've been talking about that quite a bit. We broke out, pretty interesting, on the breakout. We moved down in that A wave of this zigzag within the corrective wave 4. So a lot of you like to point out that zigzags are corrective patterns. They are technically flat zigzags, and triangles are the corrective patterns within the Elliott wave. But I do like to trade zigzags directionally as well. But just interesting that that A wave impulse came right down to the support resistance line that we had going back from September and November. Pretty good spot for it to bounce off of. And then the B wave goes right to that trend line of the ascending pennant. And then we get the 100% extension that occurred on Monday. So what we were looking for after Friday's close, we talked in last weekend's recording about how all these markets had broken major support areas. And the question was going to be, do we get the follow-through days on Monday? And this is a perfect example of why follow-through days are so important. Follow-through or confirmation days. We didn't get that. But we still have the line here that we talked about over the weekend. One of the cool features of this software is that when you've written on it before, it remembers anytime you bring a chart back up. You don't have to save it, do any of that stuff. It just automatically remembers it. And by the way, if you haven't gone to the hub.com website and gotten a copy of this, go do so, hubb.com. You get free Elliott Wave. You get free intraday Elliott Wave. Great piece of software. And then if you're interested in the AI signals, there's a subscription available for that. Last week, we referenced a recording that I did, a chat with the CEO of the Hub organization talking about the AI outlook for 2025. So perhaps give that a look as well. But back here, taking a look at where we are in the market. So Monday, no follow-through day. We closed higher than Friday's close. So we didn't get the confirmation of the break below support. And then on Tuesday, we had a tamer than expected PPI report. The market opened higher, but it couldn't hold it. It gave a lot of it back as the market was looking towards the CPI report that it places more weight in that was going to come out on Wednesday. Wednesday's CPI report was tamer than expected as well. So after wrestling with the hotter than expected jobs report on Friday, all of a sudden, bam, bam, we get two weaker than expected inflationary reports. And then we had Fed Governor Waller coming on saying that you could still see maybe 3, possibly 4 rate cuts this year, or you could see 1. He was kind of all over the map, but in general, he was a lot more dovish than people thought, and that kept the bid under the market. So we had the gap up, which I hate, on the CPI report, and so far we've held that and continued higher. We had to also form this little bit of a down trend line here on a set of lower highs before we're breaking above that in today's trade. So once again, that makes next week important. We'll be able to find out on Monday because the markets are closed on Monday. But on Tuesday, we'll see if we do get follow through on this break of this down line. If so, then likely this wave 5 is underway. You can see that the algorithm has colored it solid purple, which means it does think that that wave 4 could be done right at a 50% correction. Logical place to have a correction. Just kind of wish we would have had more of a correction. We still haven't had that 10% one, so we got to keep that in the back of our minds. But at this point in time, it looks like we could be off to that wave 5 high. If I put the moving averages on, another couple things to note. One, that we were able to close back above the 50-day moving average. In fact, all of them, ones that I look at, 10, 30, and 50 on that move on Wednesday. Kind of gave it back a little bit, but stayed above the 10 and 50 on Thursday, and then today breaking above all of them, and we're getting awfully close. We're not there yet, but we're getting awfully close to getting a reverse cross back in that 1030 moving average crossover pattern, the fuchsia colored lines, the 30 days. So you can see the 10 days coming back up. If we can get that to break back above the 30-day and we get follow through on Tuesday, I think you'd be pretty confident that that wave 5 is underway. But just as we found out on Monday, we need to see the follow-through or confirmation day. We aren't significantly overbought. You can see we actually tapped the 10-day moving average on the low of the day today. So we'll see if we can follow through to the upside this time on Tuesdays. We take a look at the VIX. Maybe the VIX was kind of telling us. We gave two scenarios with the fact that we had that sell-off on Friday without a real significant move up in the VIX. And it was like, does that mean that ho-hum, it didn't really mean anything? Or does it mean, oh, man, there's more to come? Well, we got our answer. It meant that the market really didn't put a whole lot of fear into that move on Friday. Probably because we had the big economic reports coming out this week. So here we are back down in that range, 15 to 17 and a half on the VIX. So a little on the tamer side with a little extra volatility. I think, again, that's going to be the theme. It's going to carry out throughout the year, which is great if you're an options trader. Let's take a look at the bond market before we take a look at the rest of the markets, because that's had some activity with what's gone on in the markets as well. Look at this Elliott Wave pattern on the TLT. And remember, this is prices, so yields are inverse, so the opposite. So pretty volatile in the bond market here. Odd that you see, I talked about this last week, moves of this size and of this speed are unusual in the bond market. The bond market moves, but usually not this dramatically directionally in such a short period of time. We had the wave 4 go right to the 50% corrective level. That's going to give you 100% extension. And look where we went. In the zigzag, we went all the way down to the 161.8% level. The same zigzag that had started back in the wave 3 did continue down. And the wave 5 went to the 100% level right at the midpoint of this tap box. Again, amazing if you really get good and focus on Elliott Wave and these corrective patterns. They're amazing. But right there in the tap box, part of the Elliott Wave algorithm included in the software. And then we bounced back up. So we gapped up on prices on bonds on that CPI report. Really didn't pay much attention on Tuesday, but did on Wednesday. So this is a little bit of relief on rates, and that's helping to keep a bid underneath the equities market as well. So the question becomes, are we finished? Is this wave 5 done? It may very well be. It's also colored purple, and it's right at a logical point at the 100% extension. Well, that means we start to creep back up towards that wave 4. Now, we're right on the decision area, because anything less than 100%, the wave 5 corrects back to the previous 4. If you go longer than 100%, then you only correct back to the 61.8% level, and that would be somewhere coinciding with this area right where we had the zigzag pattern extension on the wave down. So if we can continue with this bounce in bonds, then perhaps we can get some more movement to the upside, would tie in with that wave 5 on the SPY moving higher. So finally, they would be in agreement, as the bond market and the equities market have been at odds for quite some time. But again, we need to see what happens on Tuesday. So when we take a look at the DIA over on the Dow, same thing. All these had very similar charts. Last week, they all broken support, and now they've all turned around, gone back up. None of them with any follow-through days on Monday, and all of them with a gap up on the CPI report that came out Wednesday, back above the 30 and 50-day moving averages. We're looking to get that 1030 cross back again on the Dow as well. So we'll be watching that early next week. Also, in addition to the SPY, and then with nice little gap up here. So two gaps. We're getting a little gappy here in the DIA. So again, that always makes you nervous, because you just don't know when those gaps are going to get filled. Sometimes it's immediate. Sometimes it takes some time. You can see this last gap up that we had in early November on the election. Then it took all the way till just this week to get that gap filled. So we'll see on these two. Just wish that we didn't have the gaps. Feel a lot more comfortable without it, but the market doesn't ever want to make you feel comfortable about what's going on. So let's take a look at the Qs now. The Qs had a little bit of a descending triangle, and you can see we're trying to break out of that today. If we can keep the pressure off from the bond market, then perhaps we can. Note that this wave 4 is still colored green. So what that means is the algorithm is not quite sure that wave 4 is done yet. When it is, it colors it solid purple. And you can change those colors to your preference. I just do the purple and green. So right back above the 50-day moving average, getting awfully close to a bullish 1030 cross here on the Qs as well. So we'll see if we can close above this trend line in today's market, and then look for that follow through on Tuesday there as well. So once again, the theme is carrying through. Do we get the follow through to the upside this time on Tuesday that we didn't get to the downside on Monday? So taking a look at the IWM, take a look at the small caps. And as you would imagine, a little bit of a bid back. This was one market I said that seemed to be working in concert with the bond market as rates were going up. It was putting a lot of pressure on the small caps. So you would think if the rates are going to ease off, you get a little bit of a bounce, and we did. Another one with a gap. Not quite as close on the 1030 crosshair, but once again, if we can hang in there with the bond market without any other selling in bonds, then perhaps we can continue this wave 5. Just barely still qualified, just above that 78.6% fib level. So we'll see again if we can close above the 50-day moving average today and follow that through on Tuesday as well. Taking a look at the dollar, you would expect a little bit of a pullback with bonds easing off a bit, and they are, but the dollar staying pretty stubbornly high. And once again, right smack in the middle of the tap box on that wave 5, just dead spot on with the targeting on the dollar. So again, Elliott Wave works in any security in any time frame. So back down towards the 10-day moving average here. It's a little bit elevated. I did think that perhaps this quarter's earnings was maybe we would see a little bit of jawboning about the exchange rate hitting the bottom line in these companies because it did start this move in the dollar in the beginning of this quarter, but it may take till next quarter before we really see the effects on earnings. When you pay the exchange rate, it goes right to margins, right to the bottom line. But if the dollar could ease off a little bit, once again, more support for the equities market moving higher as we move into the inauguration on Monday as well. All right, let's take a look at the metals. When we look at GLD, you can see that we have this breakout of this symmetrical triangle. We have that in our volatility strategy at evotrader.com, where we trade triangles and these breakouts. So far, GLD breaking out nicely. This breakout would make you think. Remember, when I was talking, I thought maybe the metals may wait a little bit just to see what Trump actually does in office, whether or not all the talk of tariffs, if he's exaggerating a little bit or using it for leverage, and maybe he's not going to use as many tariffs or as high as he's talked about. I thought the metals might wait and see, but nope, we're breaking out ahead of it. So either the metals think that the Fed could move back to an easing cycle. It's amazing how the rate hike whispers just completely disappeared as they were starting to get a little louder and more numerous. They're gone now. And now we're starting to price in, based on Waller's comments, perhaps a higher probability for more cuts this year. He didn't rule out March as a potential rate cut. Said no in January, but that was a little bit of a positive surprise as well. So the metals either don't think Trump's going to be as significant on the tariffs, or feeling like the Fed is back in easing mode. Looking at SLV on it, it's trying to break out of its descending triangle. Remember, descending triangle doesn't necessarily mean you're going to break to the downside. Any triangle can break either direction. That's what the data shows. And we had a little bit of a breakout. We're back testing that upper trend line of the lower highs right now. So silver lagging gold a little bit, but as we know, silver can play catch up really quickly. Now this one is disqualified because that wave 4 went to 80%. So that Elliott wave pattern is disqualified. But we're still looking at the breakout of this triangle, and it's a rather large descending triangle. So once silver decides to move, it can be a pretty significant move. All right, let's go to energy and look at oil that had the breakout. I mentioned that I would be surprised to see it go above 80. Did think the breakout was coming because that was too well formed of a triangle. But I really thought we might kind of bump our heads a little bit on these highs back from August and October. But nope, kind of blew right through that, went up to 85, and now we're backing up a little bit. But so far, all we're doing is correcting a little bit or consolidating this big move to the upside and the separation from the 10-day moving average. You know the rule. No security in any time frame gets too far from that 10-day moving average. So on the high there on Wednesday, we'd gotten way above it. And so now we're consolidating that move, letting the 10-day moving average catch up. So we made it almost to 85, a little higher than I thought. Hopefully this comes back down. That will not feel good at the gas pump. And I do think I've been talking about this, and they actually came out and said it over the past week. OPEC, that with the drill baby drill, the more production that the U.S. makes, we're just going to cut. That's exactly what I thought they would do. I've been saying that for weeks, and then they came out and said it. So oil prices are likely to stay elevated, but how high? A little bit higher than I thought they might go. I still think somewhere in this big trading range is the sweet spot. But the algorithm's not sure this wave three is finished to the upside yet. Right now, we're just consolidating this big move. So we have to see if that's the end of the wave three or if we can even go a little bit higher. But if we do, if we break above 85, gosh, we're looking at 90, 95 again. Hope that doesn't happen. Taking a look at UNG. And while I'm talking about UNG, this was our featured case study consideration during this week's Trade Finder. And if you haven't signed up for Trade Finder, you can do it with the link that you see on your screen right now. We do it every Tuesday at 1 p.m. Eastern time, so it's during market hours. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a great audience. They chat back and forth, ask great questions. Love to have you join us. It's really fun doing it during the day. This week, we were actually watching the market move while we were doing Trade Finder. So sign up there and join us this coming week. So UNG was bullish on our case study consideration, and it made a nice move, probably on this big Arctic blast that's coming in. We still have snow and ice here from the last storm last week here in the mountains. We'll see what happens with this next storm. Maybe no snow, but it's going to get awfully darn cold, and that could likely keep a bid underneath UNG. Only problem here is, once again, this gap up. We got a little extended once again from the 10-day moving average. So there's that same scenario in UNG that we had in oil, a little too far from the 10-day moving average. So back consolidating today, and we'll see what happens next week. Once again, the wave three labeled and still labeled as active. So the algorithm, not quite sure that wave three is done either. And take a look at these zigzags here on UNG. So after completing this perfect zigzag to the downside, so you get a 38.2% B wave correction, which is going to give you a 61.8% extension, exactly what happened. And then we went into a little bit of a corrective flat there, and then a new zigzag to the upside in the wave three. So with that, we'll see if we can continue to move higher in natural gas. Seems like we're getting a little bit late in the winter for this move, but maybe just this kind of weather is what it took to get it to make that big breakout move. Be interesting to see. Now let's go to the crypto land. We'll take a look at BTC. So when we take a look here at Bitcoin back above 100,000 at the time of this recording. We are recording during market hours on Friday, so some of these prices could be slightly different into the close today. But right here at just under 105,000 on Bitcoin, you can see we had that little bit of a trend line down there. So another descending triangle. Once again, doesn't mean a downside breakout. So we had the lower highs, but we're breaking above that today. So again, can we get follow through to this move? Can we continue higher? So, boy, there's some crazy forecasts on where Bitcoin may go this year, and we may be off to the races. And it does seem like this is going to be a priority of President-elect Trump when he comes in. He said it was going to, and more chatter about that today on the financial markets. Taking a look at Ethereum, getting a little bit of a move today. It hasn't really had quite the movement that Bitcoin has, a little bit more of a corrective move as well. But back up in the 3,500 area, 3,421 at this moment. And we'll see if we can get back above this 61.8% level here at 37.5. That's from the previous zigzag pattern. Another one that worked out really well on Ethereum. You can see the 38%. Same thing that was on Bitcoin. That's going to give you a 61.8% level. Came back, tested the previous fib level, went to the extended level again. All this very classic Elliott Wave zigzag corrective pattern stuff. We'll see if Ethereum can kind of catch up with some of the other cryptos that are moving, especially taking a look at Cardano is hanging in there pretty well, trying to break above this area of resistance here. It's got a little more work to do. It's kind of right in that area. And here was the breakdown of the triangle. You go back to the point of the triangle. Same thing as with gaps. That is a rule that happens a high percentage of the time, but you don't know how fast we're going to retrace to the point of the breakout. Sometimes it's immediate like this, and sometimes it takes a while. But we're right in that area. So we'll see if Cardano can break above this. And you could even make an argument that perhaps that resistance line should be a little higher. But we break above here, above this 120 area, I call it, then Cardano could be off to the races up to that wave 5 as well. And then Continuing to stay hot is XRP as it broke out of its own descending triangle pattern to the upside. Big, huge break there. A little bit away from the 10-day moving average. So this kind of sideways back and filling consolidation following these moves is warranted. We are in wave 5 here. So the only question is, do we go higher? Do we get up to $4? Or do we hang around in this area for a while and then see what the next corrective phase will be, sideways or perhaps a little bit down? But for now, we don't know that this wave 5 is over. We're just letting the 10-day moving average catch up, and then we'll find out if we can get in towards the middle of this tap box. Seems likely to get this far and not move up to that round number 4. That plays out a lot, as you know. And now as we go to stocks of interest that y'all ask about, you ask about the SMH last week. And just as a quick reminder, we're doing this again this year, the free giveaway. Where we're giving away one of our level 3 subscriptions at ewotrader.com. That includes our time strategy, which is the sideways strategy where we look to generate income, the volatility strategy, which is those triangles that we've been talking a lot about, and the breakouts, and then the AI impulse strategy, which is primarily focused on AI signals and zigzags within the wave 3. So you get all 3 of those combined. It's several $1,000s on the website. We're giving away one free every month, and all you have to do to register for the giveaway is leave a comment underneath this video. So leave a comment, and you're registered for the drawing. So once again, once a month, every month this year again. So the SMH, you can see that we had a wave 4 right at 50%. We barely took out that wave 3, just enough to label the 5, but we don't know for sure that that's over with. We haven't gotten into the tap box yet, but with the wave 5 labeled and purple, it's confirmed. So we just have to wait and see if that's the end of it or if it can continue higher. Once again, got a little too far from the 10-day moving average there. So right back down, gap up, right back down, and then we'll see if we turn higher. This is going to be tied to rates also. So if we can keep the bond market calmer now and not so volatile, then perhaps that can yield a further bid under the SMH. PLTR is bounding back as well, as a lot of the tech stocks are with this relief short term or longer on the bond market. We just don't know yet. So again, that was the changing exchanges. It wasn't really that big of a gap. And then we're bouncing back to the upside here on Palantir. I know a lot of you are happy about that. The wave 4 just above this area that we talked about last week of some congestion there around the 60 level. We didn't quite make it down there. Thought we might get that far before bouncing. We didn't quite get that far, bouncing back. And you can see that we never got that bearish 1030 cross. It got awfully close and just barely hung above there. And with this move higher, we'll be watching to see if we can get back above that 10-day moving average today or on Tuesday. We'll look at Tesla. And Tesla, as you know, has been in the news because Elon's relationship with President-elect Trump throughout the entire election process, or at least towards the end. So here we had the zigzag pattern to the upside in Tesla following the election. Just beautiful 38.2%. You're going to go to 61.8. Then it just blew right up to 100%, even went a little higher than the 100% level. So that was telling us we were getting a little bit extended here. So we'd already had the normal extension plus 1 on the C wave. So when you go higher than that, that's getting a little bit overbought, plus a little separation from the 10-day moving average. So we came back down, consolidated here a bit at that wave 3 high, or a C wave high. And then pulled down a little bit more, but held above the A wave impulse, which is key, and bounced right off that 38.2% fib corrective level, just spot off of it, exactly as you would expect. So now we see how far we can go here on this bounce higher. Once again, never got the bearish 1030 cross on Tesla either, and giving some consolidation here through the 10-day moving average. If we can get a further bid in the equities market and continue relief market, then I think Tesla may be up in its wave 5 as well. And if you're wondering where that is, it's up between 550 and 650 would be the target. So a ways out, you could see where the wave 5 was forecast, but still, it's also pretty far price-wise. So first things first, do we make it to 500? And obviously, if we get above the wave 3 high, we're there anyway. But can we continue higher here? Thought I'd bring in the DMI, and it did show that when we did go through the correction, it sapped all the strength out of that move. But now the ADX is trying to turn back up. We had a little bit of zigzagging right through here, snaking, I call this, when the two directional indicators go back and forth like that, kind of like the motion of a snake in the sand. And now the ADX is trying to turn back up. The two directional indicators are trying to separate. It's a little early to call the next run, but it does look like there's the potential for Tesla setting up for that wave 5 higher. Some stuff about India that I wanted to share with you. We hadn't looked at the INDA here lately. We do on Tuesday, but I wanted to show you something that occurred here. If you've been watching for the several months over the past year specifically, and before, as the INDA was running up, it kept having the wave 5 relabeled to a 3, make a new 5, that would relabel to a 3, make a new 5, and it kept doing that all the way up. Well, now it's done it on the way down. So down in this area, right around in here, we had labeled the wave 5. And then we had that little bit of a bounce. Then we came back and moved lower in the tap box. And then we broke out of it, and it's relabeled that 5 to a 3, which seems that there's some more corrective action to be taking place on the INDA. So keep that in mind. We will get the wave 4 bounce at some point in time, and we are starting to get a little bit of separation here between the 10 and the 50. That works the same as when no security any time frame gets too far from the 10-day moving average. When the 10 and 50 separate a lot, it works the same way. You're going to get the 10-day move back to the 50. So at least go sideways so they can move back together, or perhaps a little bit of a bounce. So maybe we get the start of this wave 4 at some point, but we have to keep an eye out for potentially a lower low there on the wave 5 low on the INDA. So I wanted to update you on that, where we were wondering if the selling was over. Maybe not so much on the INDA, at least after a short-term bounce. And then Coinbase, we'll finish off this recording with Coinbase back into the crypto space. And as you would imagine, with the movements to the upside in the cryptos, we're catching a bid here on Coinbase as well. Wave 4 right between 50% and the 61.8% fib level, so a pretty good solid area there for the wave 4. In addition, we built a little bit of support right through there as well, which is also helpful. Moving back to the upside, we're trying to get that bullish 1030 cross there. So you can see we're tantalizingly close to being able to say, hey, maybe that was the end of the correction. I still wish there was more, because I think we're going to get a bigger correction at some point. But maybe for this round, that was it. Because if we can put a couple more days together of bullish action, we're going to have a lot of well set up patterns to the upside, and a lot of these bullish 1030 crosses. We're almost back to the point of the breakout here on Coinbase. So perhaps when we hit 300, which it looks like we did on the high today, perhaps we're going to maybe go sideways for a little bit here. And if you're bullish on Coinbase, that's what you want, because we're starting to separate from the 10-day moving average. So a little bit of sideways consolidation right under this area of resistance, gather a little bit of momentum and energy, and perhaps it can break through that and take off, especially if Bitcoin is going to be off and running again. Thanks as always for your attention. Appreciate it very much. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.